Hey traders, Nick Shaheen here looking at Alibaba, and this is a Chinese company obviously. Um, at one point in time it was dubbed the Amazon of China. I'm not so sure that it resembles Amazon. It is not as dominant. It is more unilateral, let's put it this way. It's more vertical, like one zone. I know it's trying to do other stuff, but it's not as dominant doing other stuff like Amazon has been. Okay, so back to Alibaba. Okay, so the financials are not crazy as far as the fundamentals are concerned, as much as you trust them. PE is kind of muddy. Price to sales is kind of high, almost double that of Amazon, even though Amazon's PE is 80. I think last time I checked, the Amazon PE price to sales is about 4. I think this one is double that at least. Okay, this is a daily chart. So this was a very definitive flip. It showed big promise up here that it should have gone a lot higher, but something happened. Don't know what happened here. That was before the earnings. Maybe they had a pre-announcement. Maybe it was a Chinese thing. Maybe it was the May correction. Something happened to have a complete rejection. So for this candle to reverse itself within 2 or 3 days so blatantly, this was not unexpected. So those who look at charts and they see a flip like this within 2 days completely erased, then they would short it. And they would have made a lot of money. Back up here, I thought that it had enough to go through, but not before a small dip. And the small dip happened, and there they are stuck at it, but now stuck at it. Boy, that sounded weird. And they're still battling over it. The good news is they've done higher lows and butting up against a neckline of sorts. Now, if you draw it out, this is about a cup and handle-ish looking thing. What worries me is that I don't know if it's so much a worry as a note. Let me show you what I mean. Okay, so I'm going to mark it up. All right, so this is a complete rejection, right? We had a dip about this much. This is about halfway point. So they fell this much, they rallied, tested the halfback rally basically, and are failing. So if you're a Fibonacci person, 50% retracement, they hit it. Usually it's natural resistance, and I usually expect them to fall a little bit and then re-attack it, and then once they break through it, they go this way because it's, you know, cup and handle-ish, but obviously it's not a perfect cup. But the theory is there: higher lows butting up against the neckline. I don't like that they did this and failed, but today the rhetoric on China was kind of negative. But I saw it on Friday night, so I think it's a delayed reaction. What the president said about perhaps insinuating that there won't be a deal until about a year and a half, or at least the earnings elections are done. I don't expect a deal anytime soon, and I really don't care. In fact, I wish they don't do a deal. They just walk away from it and let free market reign. Let them charge whatever they want, and business will find a way. That's my opinion. There's too much at stake. Both sides will find a way. All right, so this is where it stands right now. As long as we're above this point, I'm okay. In fact, this point, I'm okay to be long. So if I own the shares, I stay long the shares. If I'm looking to chase the shares, I would wait for a breakout. What is it? It's the last failure point. I don't want to be buying too soon and let, if I'm buying shares, it's okay, but if I'm buying calls, it's not okay. Time is awful. So I either would wait for a breakout, so I'll put a trigger. Luckily, this is a round number, 180 plus, a close above 180 plus on the daily candle here, would get me encouraged that they might find buyers to rally $10, $15 from there. Of course, this whole zone, very, very resistive. So if they get here and I have wins, I book them, or I trim them, or I lock them in, I spread them, I do something with it, okay? Assuming that this happens. So first thing I would do is I would put a trigger, an alert above here, an alert below here, or here, wherever I feel comfortable, okay? Then I would act and chase that, more so this than that. Or I can do, what I like to do is, if I believe in a stock, I'd rather, instead of buying calls and hoping, I'd rather sell puts into what others fear. Now I know that Baba reports somewhere late August, so I want to sell puts, but the ones that expire before that. I don't want to be short puts into earnings, because it's a binary effect. I don't know what they're going to say. I don't know how the market is going to react. It's more guessing than actual homework. Unless I'm selling put spreads, then maybe it's a little bit more, a little safer. But nevertheless, I'd like to avoid selling into events. I know the IV is a lot lower when there's not an event, but hey, it's a boring trade. I like boring. I'm a boring guy. All right, so how would I do it? Let's figure out a way, a level where I would be comfortable selling puts. If I'm committing, I'd rather commit longer term so I don't have to baby it. So I'm going to go to a weekly chart. Maybe, whoa, this is messed up. Again, I've complained about that. They haven't fixed it. Okay, so this is a weekly chart for BABA. There's no reset button to bring back everything too. I zoom in and out, then just wax it out. So this is Alibaba on a weekly basis. Every candle is 1 week. Here we are, stuck. So this is the 180 line we talked about. This is the other line we talked about. Believe it or not, over the 5 years, this is the point of control. What does that mean? This is where most of the volume happened, down here. Why? Because clearly something happened here and along the way in here, and here, where Baba said, you know what, you guys have us completely wrong. So this is where we're going to go, and the market believed them. So now we have these points to trade. What does that mean? So based on this 5-year look, I can clearly see that there's a demarcation zone where my finger is. That zone, that little box. Perfect. Why? Look left. It was a big point of failure way back then. When is that? 2014, November. And then a complete breakout from it. And then testing, hard testing. And then now I want to leverage that information. What does that mean? I can sell the January 125 put and collect over $1 for it. So I'm a winner as long as Alibaba stock stays over $125 per share. I break even $1.20 less, so 123.80 is my break even point. Now when I sell a put, I only do it if I can and willing to own the shares at that price. So if Alibaba falls to 120, I've committed to buy it from somebody at 125. So I'm compiling losses anywhere below 123.80. Why? Because I collect $1.20 for the risk right now. So my break even point is 125 minus $1.20, so 123.80. I'm on the hook from there to zero. So, and you say, okay, zero is not going to come. I can tell you that if 150 or 148 is lost, this is almost a sure thing. And if this is lost, this is almost a sure thing. Because then it becomes like an inverse cup and handle that actually will bring back 90 into the picture. I'm not calling for it, but it's a possibility. So this box is important. I could extend it out this way and that way, and it would illustrate why. It was resistance, and then it was a breakout and was tested as support once. We can argue this time. So I'm comfortable hiding inside of it, almost in the middle of it, 125. Okay, so that would be the way I would trade Alibaba here. Instead of chasing the upside, I'd rather sell puts or put spreads and wait and let time do the work. All right, if you have any questions, let me know. Nick signing out.